This is our Forex blog for June 14th, 2013. I've been pretty busy working on trading systems this week, and by the time I was done, it was late at night, 7, 8, 9 o'clock, so I didn't do blogs this week for a few days. But going back a couple years, most of our methods are very similar that we've taught years ago. The currency index is relatively new, being the last 2 or 3 months, and basically it shows you what each currency is doing visually. You can see the dollar's kind of chopping around here. You can see the euro broke from above to below its hourly moving average, something that usually, or I should say often, causes trends. You can see the same thing here happened with the pound at around 240. The CAD went from below to above its hourly moving average here, and it shot up. This one found resistance at the hourly and then broke out. It retested that area and trended up for many hours. You can also see the daily and weekly trend underneath it. So basically, in a nutshell, because today's blog is going to be relatively short, you can anticipate future price direction based on events, whether it's a trend line break or whether price hits the previous week's point of control right here, which is a major resistance area. Currencies hitting the previous day's low, not going underneath it, then finally going down. That's a trend that's worth trading, such as the pound that found support at yesterday's low. Then once it broke down, it went down a significant amount from 4 to 5. So that's an event that you can anticipate and trade off of, especially when a support area holds for an hour and then it breaks. It's very likely to go down, and you also know ahead of time where it's likely to go down too. You draw your fibs on there, and these fib targets are very likely to be where it goes to. You can see it went right to the 1.618, and for hours kind of hugged that level, and then retraced a little bit, and then double bottom at that point too. So anytime you see a double bottom, pretty high probability for a reversal up. And if you're wrong, you lose a tiny amount. If you're right, typically the wins are much bigger. And so that's how you use these tools to actually anticipate future price direction. Let's take a look at that pound when it broke down underneath the previous day's low. Right here. You want to sell the pound versus whatever's strongest. The CAD just shot up and is actually kind of pulling back right now. The dollar's above its hourly moving average. You can see the weekly trend of this one's down. The yen is also above its hourly, but the daily and weekly trend's up. So if it was me, I'd rather short the pound yen versus the pound dollar. So let's take a look at that at 4. And this is basically in a nutshell how easy this is. 4 o'clock, we're looking for sales. And this is nice because just before 4, the pound yen broke from above to below its hourly, which oftentimes causes big moves. And when every time the hourly gets broken, probably 70% of the time, 67% of the time, you'll have a retest. So when price came back up to it and really couldn't get above it, 4 o'clock, you can see it went down about 15 pips here. You got a pullback, fell down another 20 pips, pullback, another 20 pips, pullback, another 20 pips. So for many hours after that, from 4 to 8, you're looking at selling this, and that's exactly what happened. Now, also, if you're watching the yen from 4 to 8, notice it's not going up, and yet you had many profitable trades. If you traded the pound versus another one that was strong after 5, the pound New Zealand, you're gonna probably find some much bigger moves than that. Sometimes one currency moves and the other one doesn't. So here, from 5 o'clock onward, or I guess it was from 4 when the pound broke down, you can see a big drop here. If you miss that one, you have this pullback right here. This is a 25-30 pip move. You have a nice little rectangle pattern breakout here that led to a pretty nice trade. And this is the best one because you had a nice decent pullback. And if you drew your fibs off this, more than likely this was your fib target here. We'll go ahead and do that right now. It might have been off this level here because that's really the first swing down. And you might have even drawn it off this one. So it went to the 1.618 off of that swing. And it might have also went to the fib target of this one. When you have multiple fib areas converging, which it looks like this did, and went right to the 1.618 of the big swing, plus the 1.382 of the last swing. And from this little swing right here, it might have also went to one of the fib areas. So you have a big cluster of fib areas right there. A very high probability place to get out of your trade, and you don't know if you're going to get a big bounce up this many pips, but that does frequently happen. It happens more than most people probably who don't trade would think. All right, so one more, because I got to go today, anticipatory type of trade. You can draw trend channels on, currencies when you see them going up like this. And, once you have the first and the second one projected on here, you can basically buy in the lower quadrant and get out here. Now in this case the weekly trend's down. If the weekly trend was up, it's a better trade. Here at 8, if you get into a trade and it doesn't go up, well, you have a small loss. When it does go up, typically you already know ahead of time where to get out of the trade at. So let's just kind of go forward and see if that last trade worked. So once it kind of broke underneath this here, you probably would have got stopped out, but you did have this one trade at 6 that was quite profitable. And let's see if the CAD also makes a move up. You have this swing from here, you project it off the high here. A lot of times trend channels don't continue in a formatted way, but when they do, you know ahead of time usually where the profit target is, and it rarely goes above the upper quadrant. And when it does, when it comes back into that quadrant, it's a pretty high probability place for a reversal. Because let's face it, the majority of the time the market's kind of chopping around up and down, and maybe 1 out of 10 moves is real, and it's a continuous type move. Now this one, went up, and if you count the waves, you're also going to do better. The first move up, second move up, third wave up. Typically the third, fourth, or fifth wave, you're going to get a pretty decent reversal. In this case, it was the third wave up. This would be a much better trade if the daily and weekly trend were down. But that being the case, at 10 o'clock, what one was likely to go up or is going up? This is a tough one because there's nothing really, sometimes there's no super strong currency to be buying. You could say the pound because it's gone down so far and it found support right here. If it goes back above the hourly soon after, you would definitely want to buy the pound New Zealand. The CAD is the closest to its high of the day. If you can't find a currency that looks super strong, trade the one that's near its high, and that would be the CAD. Now the only downside with the CAD is the weekly trend's down, but selling the New Zealand CAD around 10 o'clock probably is going to give you 20 to 50 pips without looking at the chart, and I didn't trade this one today. And so there we go. 10 o'clock, you knew that the CAD or the New Zealand was likely to reverse. The CAD was the strongest of all the ones you saw in there, and you could just say when it went underneath this bar, put your stop above here, and a lot of times when trends are up or down, they retrace back to the hourly moving average. So this is where I would probably get out of the trade. But the key to trading is small losses and big wins, and you can see in this example here, you anticipated it. The CAD was, not the ideal textbook perfect strongest currency, but it was the one closest to its highs, and if it did break out and the New Zealand reversed, you're going to have those big wins. When you can see 10, 20, 30, 35 pips on that trade, it continued down, and once it broke underneath its hourly and you give it a chance to retest it here and it can't get above it, this also is a very high probability, and you would draw your fibs off of this, and you got your fibs down there. You also, I would always draw my fibs off the last small one. Those are down there. This is a pretty decent area to look for exits. Our perfect oscillator is showing an extreme, so it's likely in the future to kind of bounce up maybe to 80 to 2. We'll see. Oh, that's where the market closed. I forgot. It's Friday, so that's where it closed. You didn't get a bounce. Before I end today's video, I'd like to showcase our perfect oscillator. When this hits the plus 80 and minus 80, probably 70–80% of the time you're going to get a reversal, especially if it's in the direction of the trend. So earlier the trend was up, so it's kind of chopping around here, but clearly it made a higher high here. This is a phenomenal buy. But if you look at every little swing, that one worked, that one worked, this one nailed the low, this one nailed the high, this one it did pull back 10–12 pips. This one nailed the low, and if you go back even further, you see this one here nailed it and it hit the plus 80. This one here kind of went a little bit against you, then it popped and then kind of went sideways. Typically when these get hit, you got either sideways movements, it rarely goes explosively against you, in other words, when these get hit. I mean, it can, when those markets go 200-300 pips some days, obviously the perfect oscillator, it goes way off the charts here. But the majority of the time, most days, the perfect oscillator hits plus 80, you can sell, especially when the trend's down. Also, another way to use this is we have Bollinger Bands of the perfect oscillator reading on here, and if the trend is down, for example, and price comes up to its upper Bollinger, that's a pretty decent place to sell. You can see right here, pretty decent place to sell. It's nowhere near as good as the plus 80, minus 80 levels. Those are by far the best. But when you have a trend that's down and price reverses to the upper Bollinger, not a bad place to sell. So there's so many different ways in our software. You got to learn our tools, a lot of different ways of trading. Find the one that fits your style the best. And again, notice this low right here at the 80. It didn't explode the other way, but it did go 10, 12 pips up, and then it reversed back down. When it's underneath the hourly, it's much more likely to.